Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com. And in this video, I'm going to be breaking down a question. Can you have a 35% win rate and be profitable in Forex? And the short answer is yes, absolutely 110%. You can have a 27% win rate and be profitable. You can have an 18% win rate and be possible and be profitable. Win rates by themselves are not your edge. And this is where lots of traders get confused. Yeah. We have a risk reward ratio edge, right? Now, many traders will say, well, my strategy wins 80% of the time. So what? It means nothing if the risk reward, if not compared to the risk reward and understanding the break even win rate. So a popular target for traders is usually to go for example, a 1-to-1, trade. So for every pound that you risk, or dollar or euro that you risk, you go for £1, dollar or euro as a reward. Now, 50% win rate is what you need to just break even. Anything above that is your edge. Yeah. So if you have a strategy that wins 1-to-1 and over the past 10 years, you have a 51 or 52% win rate, then you have an edge in the market. If it's anything around the break-even rate or below, you do not have an edge. At a 1-to-2 risk-reward ratio, your edge is your win rate at 34, 35, 36%. Yeah, that's what your edge is. Now let's look at this in, I guess, a different context, in the context of the house, right, in a casino. So the house edge is a term used to describe the mathematical advantage, right? The mathematical advantage that the gambling game, and therefore the commercial gambling venue, for example, the casino, the gambling game being, for example, blackjack, has over you as you play over time. Yeah, this advantage results in an assured percentage return to the venue over time, and for you, an assured percentage loss of what you bet. So when you walk into a casino and you play blackjack, the more you play that blackjack game, the house has an edge. Doesn't mean that you're not gonna walk away from that table that time with some profit. Of course you will. But if you keep playing that game, roulette, whatever it is, over time, they have an edge over you, right? They have an edge over everybody that comes into that casino. That game has an edge over you. The longer you keep playing, right, you might walk out with a profit today, but if you go back again tomorrow, the next day, they will get that money back. They have an edge, yeah? So let's look at actually what the edges are in the game. So this is from Gaming Mathematics, chapter number 3 by Elliot Jacobson, PhD. And look at the game. So blackjack has a 0.46% edge. Casino War 2.9. Craps has a 1.14. Not massive edges. They're not massive edges at all. You would think that these edges would be, 20, 30, 40, 50%. But look at that. Roulette 5.26. Free card poker 3.37. Yeah. So the edges aren't major edges. They're just literally between 0.46 and like 5.26% edge. So what does an edge actually look like? And we're going to go to a video, and this is from this is the software. And before you guys start to bombard me with questions about how can you get a hold of this software, the software is not available anymore. But we do have videos that I can potentially just email you or point you in direction so you can actually just see. But anyways, this is a piece of software that analyzes the probability and also risk reward. So heads, you win 200, tails, you lose 100. So that's a 2-to-1 or 1-to-2 risk reward ratio. Yeah. So the probability of you winning the heads and winning 200 is 35%. Remember, at a 2-to-1 or 1-to-2 risk reward ratio, meaning that you're going to win double for every that you lose, To break even, all you need is a 33% win rate. So this shows you a 2% edge. This is showing you a 2% edge in the market. Your strategy, having a 2% edge. So you'll see the heads and you'll see the tails as well here. And let's just go through it quickly. So let's go to about here. Now, this is this axis here would represent your account size, and this would probably represent, down at the bottom, would represent your the number of trades, right? So if you've taken 400 trades, most traders would say, well, this strategy doesn't work, it's nonsense, I'm going to search for something else. And also they back tested their strategy, right? So they back tested the strategy, and let's say, for example, they do have a 37% win rate at a 2-to-1, and over the past maybe 10 years. But when they come to trade it in the market, what they don't understand is that you're going to get drawdowns. It's not the market is not going to keep going, up and up. You're going to get drawdowns. No one knows when those wins and losses are coming, because we understand the law of large numbers, But mathematically, you have an advantage if you can keep trading that strategy and stick to the process, instead of just chopping and changing your strategy every time you go through a bit of a drawdown. And you might go through a drawdown. This might represent 2 days, 3 days, 2 weeks, 3 weeks, 2 months, 3 months, of trading, this whole area here, But do you think the casino, who has a 0.46 edge in blackjack, is thinking that something is wrong with their blackjack game whenever they lose, or whenever that blackjack game doesn't return them a profit, at the end of the week? No, because they know that mathematically this is what is going to happen over time. It's going to happen as night follows day, and as day follows night, it's going to happen. So let's go forward a little bit more. Right, so we've got around about, say, 7,000 flips, 7,000 trades, 7,000 games, for example. This might be a blackjack game. And at the moment, it doesn't look good for that game, does it? It really doesn't look good for that game at all, right? It doesn't look good for your trading strategy, for your equity curve. But I assure you, right, if we keep going forward, right, as night follows day, your 35% win rate, your 2% edge, mathematically, if this is break even, is zero rate is break even, you went from maybe something like 8,000 trades to 14,000 trades or games or flips, right? This is eventually what happens. This is what happens as we keep more games, more games, more games, more games. It is impossible mathematically for you to lose if you have a 2% edge. All you have to do is stick through it, through the drawdowns. So unfortunately, you might not necessarily get that Lamborghini anytime soon, but that's not what trading is about. It's not a get rich quick scheme. This is not get rich. If you're looking to try and get rich quick in Forex or the markets, this is not for you. If you want to grow your account and have an edge in the market, and just keep putting money in, growing your account slowly, and you have a mathematical edge, a risk reward edge in your favor, then you are assured a return, right? Not necessarily a return every week or even every month or even every year, but if you've back tested your strategy and you have an edge, then trade it. Just stick to it. Now, trading success. I was told this by my mentor, Mark Chapman, who was told this by his mentor, who was a hedge fund manager. And I credit Mark with it. Obviously, it came from the hedge fund manager, but I don't know his name. So I'm crediting him with Mark Chapman at the Underground Traders Alliance, who is my mentor and a good friend of mine. And he said this to me the first time we met and we spoke. He said this to me: trading success equals good risk reward plus the elevation in probability of achieving that reward over risk. Recite it, memorize it. Your success as a trader is contingent upon it. And what he's saying is, is that you have to have good risk rewards. It's not only good enough to have good risk rewards, but you need the elevation in probability of achieving that reward over risk. And one of the ways that we do that at Trading 180 is understanding fundamentals. Fundamental analysis is an elevation in the probability of achieving that reward over risk. We have a fundamental analysis spreadsheet which shows us strength versus weakness based on the macroeconomic data such as GDP, interest rates and inflation, and some other data as well. And what we do is we look for elevations in the probability of achieving our reward over risk. So for example, we trade 1s, 2s and 3s, which would be Australia, New Zealand, and at the moment Japan, would be number 3. So those are the strongest currencies currently according to this data, and the weaker currencies are going to be 6, 7s and 8s. So Switzerland, the United States and the Euro area would be 6, 6, joint 6 and 8. So it's easy for us then to go to a price chart and look for those currency pairs and look for those directions based on the macroeconomic data, because that is really what moves price. You've got fundamental analysis, risk sentiment and liquidity are the 3 things that will move price. And we're looking for an elevation beyond just the technical analysis, right? Because it's not every single supply zone you should be selling at, and not every single demand zone you should be buying. Also, you want to have the confidence to hold trades for the trend if you're looking to trade strength versus weakness, because a strong currency versus a weak currency is most likely to trend. So why get out at even a 2-to-1 trade when you can hold for 5-to-1s, 10-to-1s, 15-to-1s? So if you do want to have a look at the Trading 180 fundamental analysis spreadsheet, this is for members only, and go to trading180.com and sign up for the free course, and then you may have potential access, depending on if you pass a few questions, to join the Trading 180 Discord group. I don't want to work with just any and anybody. I want to work with hard working individuals. Trading, despite what is sold and said online, it's one of the hardest things and one of the hardest endeavors that you will ever get into. And if you're not willing to put in the hard work as a minimum requirement, it's just not going to work for you. People want a simple solution to a complex problem. And while there might be the way that we trade, you're going to need some hard work and some elbow grease in order for you to at least stand a chance within these markets. So I'm not promising you and I'm not selling you a dream here, but what I can do is provide you with a tool that elevates your probability of achieving good reward over risk. Anyways, guys, take care and I will speak to you soon. Until the next video.